All right, hey guys, welcome. It's Monday night. I'm glad you're here with us. Welcome to the Dream Achievers weekly Zoom call. And tonight we have an amazing guest speaker. Her name is Amber, and she's going to talk to us about taxes. Such a fun topic. But before we get to that, I would love to hear from two of you on some victories. Who wants to start? Maybe just share your name and your victory, big or small, preferably business related. Who wants to start?
I've got one. This is Barb. I have a fundraiser that's closing up tonight. They're at $3,400 in sales.
Hey guys, I gotta hop off. Amber never got the link. I'm just going to, you guys keep sharing victories. Sheila, will you take over? Sheila?
Yep, gotcha.
Take
That's
over.
awesome, Barb. 3,500.
34, almost 35. Yeah.
Wow.
Over 10 days, 14 days.
Wow. Congratulations. That's awesome.
Thanks.
Who else has a victory? Amy, you have a victory.
How did I know you were going to call me out?
Well, you texted it to me just a few minutes ago.
I've been having a hard time getting parties, and I finally booked another online party, so 2 this month.
Good job. Anyone else? Twyla had a great vendor event this weekend.
That was fun. It was the first one I've been able to do now since last fall. So that was nice to be able to get out and meet people, talk to people, and share ideas.
Great.
All right. Sorry. Thank you. Good job, Twyla. Thank you for jumping in there, Sheila. Okay, so let's talk. Amber's coming on here in a minute. Let's talk about key lime cheese ball. Who's excited about this returning favorite? Raise your hand if you made the Bunny Buddies. The little crack snacks. They are so good. Remember, they're gluten-free. Anyway, just to remind you that on March 15th, you can order them for $7.99. There's 2 packages in here. And then they go back to the regular price of $8.99 because there's a little mistake there. So just so you know about that. The mild Moroccan sauce is also going to be a limited time for a month of April. And so from March 8th through the 15th, you can order it for 1, limit of 1. So if you want to pre-try it before your clients. And then for those of you that ordered the consultant assortment, don't forget about the virtual burger nights. Remember, we got these cute little things. March 16th at 5 p.m. Get your team on, get your clients on. Jane will be sharing some burger ideas. So check that out and do not forget about it. Any questions on that stuff? Nope. Okay. Amber. Well, anybody besides me have their taxes done? Whoa, yeah, Olivia, your husband's a farmer like mine, so that's why mine had to be done too. Twyla, how come yours is done already?
My tax accountant does it right after he gets the farmers done.
Oh, good for you. Christy, yours is done too?
Yeah, we're farmers, so I had to do it.
Oh, that's right. So it's like a nationwide thing. I didn't know if it was just Minnesota, but it's nationwide. That I just don't even understand that, but happy to have it done. Well, Amber, welcome to the Dream Achievers call.
Hello, thank you for having me.
I am so sorry about the link. It's been a Monday for me, I tell you that.
That's okay, no worries.
I had a Zoom call with the new team member at 5. Fortunately, she's not on the call, and I was like, man, it's not, I can't hear her. And so I called her and we were doing a Zoom, and like when I was getting ready for this call, I'm like, yeah, I forgot to turn my speakers on.
I feel you.
Woo. Okay, well, let me introduce Amber, because I know everybody's got their notepad. Amber, some of us, as you were calling in, said that we already have our taxes done because our spouses are farmers. So ours had to be done on March 1st. But there's many on the call that do not have theirs done, perhaps even started. And did you get the questions we submitted to you?
I did, yes, and I have them written down here to kind of go off of, and then of course, if anything else comes up, I'm more than happy to answer as well.
Okay, so let me officially, I got one more, I'll come in and introduce Amber. So Amber Lickley has only been with Tastefully Simple for 6 years. And she's young. Amber, I remember first meeting you, I'm like, I think you're younger than my daughters. And you've grown your business. She's a silver leader from Ohio. She has her bachelor's degree in accounting and currently studying for the CPA. Good for you, Amber. So she's a full-time tax accountant, obviously does Tastefully Simple. She's a silver leader. Her favorite parts of her Tastefully Simple business are the incentive trips and friendships. And I've been on trips with Amber, so that's super fun. And she and her boyfriend have a sweet puppy named Oliver. What kind of a puppy is she, Amber?
Yorkie.
Oh, cute.
Yes.
Well, Amber, we try to keep these calls to a half hour, so let's let you take over. Go ahead, Amber.
Okay, perfect. Yes, I will try to be quick, but not too quick. So of course, afterwards, if anyone has additional questions or clarification, I am more than happy to help you guys. But to kind of just run off some of the questions that you guys had sent ahead of time, you know, it was kind of just about reporting and how to write off your business with Tastefully Simple. So traditionally, what's going to happen is if you earn $600 or more in a calendar year or sell more than $5,000, Tastefully Simple is going to send you a 1099. At that point, you definitely need to be reporting that on your taxes because the IRS is also getting a copy of that 1099. So they now know about it. Anything under that based on IRS rules, anytime you earn income, you are technically to report it on your taxes. But without a 1099, they can't really trace it. So if you receive a 1099, it's really critical that you report it. And the way that most people do that is on a Schedule C on your 1040. However, as you build your business and go up in leadership levels, there are different things that you can do. But for 95% of you, a Schedule C on your personal tax return, your 1040, is how you're going to report that income and expenses. And so you're going to use the annual order listing or that year-end report that we get in MyHQ to file your taxes with your 1040. That's not everything, but that gives you a good starting point to go with. So then you kind of go into your expenses. And I had some notes about how to organize receipts. It kind of depends how high level you want to take it. So QuickBooks is an amazing program. They have an online version as well as a desktop version, and they help with keeping all of your expenses reconciled and your income throughout the year. There are other programs, but I really like QuickBooks. If you're not quite at that point or need that much, you could do the monthly receipts. So you just you have a folder for each month, and you would just put your receipts in there as the month goes. And you could just use an Excel document to categorize them by expense category. So now I'm sure you're wondering what types of expenses you can deduct. So I had a note about home offices. Now, disclaimer, we were kind of taught and told, you know, home offices can be an audit red flag. Not that they automatically mean you are by any means. So, feel free to talk to your tax professional. But the way the IRS views it is that if you're going to take a home office deduction, that home office needs to be used strictly for that business only. So if you multi-use it for 4 or 5 other things with that space in the room, the IRS doesn't really view it as a deductible item. But if you do have a set space that is your business, you are entitled and eligible to take the deduction. And there's 2 ways to do it. You can use a portion of your actual expenses, or you can just take the simplified method. So if it's something that you feel that you truly have, please talk to your tax professional, and they can point you in the right direction of which one's going to work best for you. What else do we have here? Oh, I guess I'll continue with expenses. So there was a question about, phone and internet, hair and nails. Again, taxes are a real gray area, and you could talk to 4 different accountants and get 4 different answers. A lot of it just depends on your own situation and the angle you want to take. And I'm sorry, I can't give a straightforward answer. But phone and internet, traditionally what happens is you would take a percentage or a portion of it, unless you strictly had a phone line that was only business related. But I think most of us just have one phone that's used for personal and business. So you just have to be able to justify and understand the percentage that you're using as far as what's business and what's personal. Same with the internet. And hair and nails, we take the standpoint that that's not a deduction. The IRS could throw it out and say it's lavish. It's something you're probably going to do on your own anyways. You're not doing it just because of your business. But again, that's, it's your choice on how risky you want to be with it. And then some other expense items, are gifts, client relations, so items you send to your team. Again, you just kind of have to keep it reasonable in check. You can't go sending someone a $500 gift. The IRS kind of frowns upon it. Mileage is a big one when you're going to events. If you're picking up items, delivering products, it's just really important to keep a mileage log. There's an awesome app that you can put on your phone called Mile IQ. And you kind of just hit start and stop within the app when you're running around doing business stuff. And at the end of the year, it totals all your miles for you. The mileage is a really big deduction, but if the IRS were to ever audit you, they want to see a log. And what that means is they want to know where you went, why you went there, and how many miles you went. The big item that changed here for 2021 is business meals. Business meals are now for this year and next year 100% deductible.
Wow.
Yes. So they used to just be 50%, but this year and next year it's 100%. So if you're take your team out, if you're meeting with the host, if you're meeting with a potential new consultant for your team, make sure you keep your receipt and just jot on it who you met with and why. Again, that's just to cross your T and dot your I in the case you're ever audited. Because the downside with audits is they happen so far after that year occurred that you're probably not going to remember anything. But I graduated in 15 from college. So, I've been doing taxes for a few years and I've not come across anyone that's been audited where I'm at. So it's rare, but the potential is there. So you just have to cross your T's and dot your I's. Someone had a question about donations and that their accountant is putting them to marketing. And again, this is one of those things that all comes down to, choices and matter of opinion, and that's not wrong. The problem is with being a Schedule C on your 1040, you can't list donations. They have to go on your Schedule A, and 95% of people are not itemizing anymore. And what that means, or a lot of people understand it as, is going long form. Because they increased the standard deduction a couple years ago, a lot of people don't do that anymore. So changing the verbiage to marketing or advertising or client relations allows you to take that deduction on your Schedule C rather than it just being lost, which I think is what we all want anyways, because we want as many deductions as we can get. And then the other question that you guys had sent through was about earned incentives, and that being other income. And the question was how to write it off. And so I'm not really sure what you're trying to write off because it is income to you. But if you have any expenses against earning those items, then that part of it is what can be written off. But just receiving the item and wanting to write it off, you can't do that. So, Sherry, do you have any questions or anything you want me to dig deeper into?
I think I'll open it up and see. You did a great job. See what the others, I'm sure there's some questions because some were submitted after I sent them to you.
Okay,
See
fine.
what the rest of the gang has first. Anybody? Oh, go ahead, Connie. You're on mute.
What about the stuff that you use like in your own personal kitchen? What can you do with that? Do you need to keep track of that and then just always pay for it, that it's going, you're paying back for that? Or can you write that off because sometimes you make stuff and share it with others? How do you handle something like that?
Yeah, absolutely. Good question. So on your tax return on that Schedule C, there's a cost of goods sold section. So in that section is your beginning inventory plus your purchases, less your cost, and then you have your ending inventory. So in there, you deduct your personal use items. They come off of your cost. So they come off of the purchases. Does that make sense?
Yep, thank you.
Okay, perfect. You're welcome.
So Connie, I would just add to what Amber shared, and we talked about this one time. I keep like a sheet in where my products are, and I mark off what I use in the year. I don't know if you're on that call, Connie. So if I use an onion, I just write it on my product listing. A garlic. If one of my kids takes the beer bread, and then at the end of the year we just add it all up. Is that what you're kind of asking, Connie?
Yes, I was confused from that last call that we had because, is it technically deductible then? But if it comes off your cost, then basically it is. But I didn't know if you were still putting in money for it. If that makes sense.
Yeah. Does that make sense, Amber?
Yeah. So basically your cost figure is going to come from your annual order listing report, and then you'll subtract off your personal use items. So the deduction for it is in there, as well as if you had to write off inventory for it being expired or bad, it goes into that section as well.
Good point.
Amber, is that at full retail or at our cost do we deduct?
It would be at full retail since we pay full retail.
Okay.
And then we just get paid commission later.
Okay.
Oh, good question. Who else has a question for Amber? Rebecca? Oh, Rebecca, we lost you. Maybe she was just waiting. Here she is.
Had to get off mute. Apparently that's hard. is that the same, Amber, for like if you donate items to for like a raffle or auction or whatever, do you deduct them at retail and not cost or whatever?
Yeah, so I do everything at retail since we pay full retail now and we get paid commission later.
Thank you.
You're welcome.
Good question. Who else has a question for Amber? So Amber, and as they're thinking, in the beginning, just to reiterate, you said if you get $600, or would you say 6,000? I thought it was always 5,000 with my notes.
Yes, it's 5,000.
Okay, I must have heard
I
you
may
wrong.
have.
Yeah. So again, if you make $600 a year, or you sell more than 5,000, is that what you mean?
Yes.
Yep.
Yeah. So it was kind of different before because our commissions weren't reported on the 1099 like they are now.
Yep.
So pretty much, yeah, if you more than likely sell the 5,000, you're going to get one because you earn 600.
Right. And the 1099s usually, I mean, I already got mine or whatever, but usually they come out from Taste Play Simple the end of January, right?
Yeah. So based on the IRS rules, they have to be postmarked by January 31st.
There you go. Yep. I remember hearing that. Yep.
So you may not receive it until sometime in February, depending on, just how long it takes them in the accounting department.
Yep. So if you didn't get one, you guys, obviously you don't have to worry about it. For Taste Play Simple.
Yeah, which I mean, if you've moved throughout the year or you're concerned, you can always call HQ and just ask if they issued you one, just to make sure, because if they send you one and you don't report it, the IRS will send you a notice. It's really easy for them to send them. So
Right. Okay, so I've always used Consultant Front Office, and Amber, I'm sure you never did that because that was way before your time. And I've loved it, but that's pretty much being phased out. So now I need to look for something else for my taxes. So I think I'll probably do QuickBooks. Is that what you recommend for small business owners?
yes, I highly recommend QuickBooks. I think it's easy and intuitive, but it may take a little bit to get used to.
Sure.
But yeah, I mean, like I said, there's the online version, which you pay a monthly subscription fee for. Or there's also the desktop version, which you just pay once for.
Right.
So, depending on, I mean, whichever one makes more sense, but yeah.
Yeah. Okay. Anybody else have a question?
Amber, I do. We always got a 1099 miscellaneous. This year it's a 1099 NEC. Is this the first year that they've made that change, or is something different happening?
So the IRS likes to keep things really fun, and they changed the form for subcontractors reporting to the NEC for this year. The lady I currently work for said it wasn't NEC a long time ago. My guess is the IRS is just trying to track things differently and track subcontractors. So the 1099 miscellaneous still exists, but not for subcontractors. So it's still the same form, just a different name.
Good question, Cheryl.
I have another question.
Yeah, cool, Rebecca.
How important is it to do the inventory on hand at the end of year? And how do you report that if you do it? Because I always just am like, yeah, no, I don't have any, and lie, and yeah.
Right. So, and you're not alone in that category, because inventory equals income. So you really don't want a high inventory figure. That's why you always see people doing an inventory sale at the end of the year. The only way I look at it is if your return were to get flagged, given the nature of your business, if you have anything on your return about vendor shows or anything for expenses, they probably expect to see some sort of inventory. So even if you just had a sheet that you had written down, like what you had at the end of the year and the value, that would suffice to, the IRS.
Thanks, Amber. What advice, Amber, do you have for consultants, just kind of overall? I feel like some people just like wait till the last minute, and I'm incorporated, Amber, so I pay quarterly taxes, and
Yeah.
I'm very, I've done this forever, so I have a system down. I have an assistant who pretty much does it all for me, but she's organized and stays on track. But most consultants don't have that, or they haven't flexed that muscle yet. So what advice, like check on it quarterly, make it a goal, or monthly, or what would you say, Amber?
So I think step one to be real organized is having a separate bank account or credit card. One of the two that you strictly just use for business, just to help simplify those expenses. And if you choose to use a credit card, a lot of them will give you an annual report at the end of the year that summarize your expenses for you. So that helps tremendously. You could even do, like I said, the monthly envelope approach, so at least if you wait till the end of the year, all the receipts are already sorted by month. But it just depends the level of your business. I mean, I would say for a lot of consultants, if you did it semi-annually. So if you did the first 6 months in July, at least getting everything totaled, organized, and then did the remainder in January. Because a lot of people put it off because they don't want to do it, which I understand. So, but if you did it twice a year, at least it would help break it up a little bit for you.
That's great advice. Yeah, wonderful, Amber. Well, we have a couple minutes left. Anybody else have a question they want to ask Amber? All right.
Do you, it's Chris.
Go ahead,
Do you
Chris.
recommend making a copy of your receipts, or do you use the original version? Because, like some of the thermal tape will disappear.
So I don't make copies, but I also don't do too many risky things on my taxes. I don't even take a home office because I'm terrified, but you can make a copy, because if you were to be audited, it does have to be able to show the date and where you went and the amount, and the IRS doesn't take the excuse that it's not legible and that the ink has gone away. So not a great answer, but
You know what, Amber, and I have a home office, as you can see. I mean,
yes,
I've never used it as a deduction. I've been doing this forever. And, 22 years ago, 20 years ago, they're like you said, it's a red flag. So I'm like, man, I wonder how much I could have saved in taxes, but I've never done it either. My accountant just did not recommend it.
yeah, I mean, it's hit or miss, and it's hard, I think, to substantiate when it's not. I mean, for you it would work, but for a lot of consultants, this isn't it isn't our full-time gig. We do it for fun, to make a little extra cash, so when you do that, I think it's hard to substantiate that, this portion of my house is really only used for that.
Yeah, no, totally get it. All right, guys, 1 minute left. Last call. Any questions for Amber, tax related? I know it's such a fun topic. We're glad that we have people like Amber that love it and are great at it. Because it's not
Amber, I went through a hardcore audit through our convenience store for our company, and I'm not scared of the IRS at all anymore.
not.
We were basically told, you just have to document everything. As long as you can do that, you're fine. Yeah, they ended up owing us $89 after it. It was awesome. It was like an in-person visit. It was the big audit. Wow. So don't be too scared to take home office. I mean,
That's true. I just like.
I just don't want to scare people from doing some of that. Yeah.
Correct. Yeah.
You do have to be prepared to take everything out and leave just Taste or Simple in there. Basically what my accountant told me.
Really? Huh.
On the way, can you tell me your name and what you're wearing so I can card you?
Oh, all right, Angie. Thank you. Well, Amber, thank you so much. I'm gonna
7 feet of clearance.
to